Hi everyone, let's go over my medium time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we are looking for a finished three-wave structure to the downside and we won't see prices of 24k anymore. Instead, we are first going to move to higher prices, either in a wave A followed by a finish B and now already a wave C to the upside, or we are looking for a bigger impulse for higher prices in a wave 3. Now in this bullish scenario, the corrective structure here is then already finished in a wave A to the downside, which is a three-wave structure, followed by a three-wave in a wave B, making sure we get a flat as this wave B took the origin of wave A over here, and then an AB and a 5-wave C to the downside, where the 3A2 has been hit, which has been taken from the low to the high of wave 1 or A, which is a minimum target for both a wave 2 or a wave B. The 3A2 is a common target for a wave B and a rare target for a wave 2, meaning that if price would now move towards higher prices, the probabilities are a little bit more on the side of this being a potential wave C compared to a potential wave 3. Now in the bearish scenario, we expect another move towards the downside before continuation towards the upside. So in this scenario, we again have a wave 1 or A, but now the three-wave structure to the downside is a bigger structure where we are now at the end looking for a WXY scenario, which is a 3-3 and then another three-wave move to the downside, where actually this wave 1 and wave A can also be put at the higher high that we have over here. Now in this scenario, we then have a zigzag in this wave W, where the rare target for wave C has been hit, as this is then a wave A, followed by a B, and then a wave C to the downside. And if I go to a lower time frame, take the trend base fib extension, you can pull it from the high to the low of A to then the high of B, toggle on the 0.618, and you can see that the 0.618 has been very nicely respected, in this then being an A, B, and eventually a C to the downside, a zigzag structure to finish wave W. In this particular scenario, we are then looking for a wave X towards the upside, where usually a minimum target for wave X is the 3A2, which is currently sitting at exactly 30k, taken from the high to the low of wave W. However, above the 3A2, we do have some other resistance areas that are very interesting, and for a wave X, targets all the way to the 886 are still common, and as you can see, the 886 is all the way up at 31.5k, but the resistance areas between the 3A2 and the 886 are first of all here around 30.1k, 30k to 30.1k. The second one between 30.4k and 30.6k, which I think is very interesting also because we have a triple top over here with undoubtedly some interesting liquidity resting there. And then finally a resistance area between 31.1k and 31.3k for then a continuation to the downside in a wave Y. Now the most common target area or patterns, for a wave Y are a triangle, a flat, most commonly therefore an expanding flat, or a zigzag. And also in a WXY scenario, usually wave W and wave Y are different patterns unless you have a double zigzag, which is a zigzag, three-wave structure, zigzag to the downside. That can happen in then a 3-3-3. But we have to keep in mind that for a wave Y, a triangle and a flat are also allowed, with then a more sideways structure, lengthy structure in a triangle, or a flat, which then is an A, B, impulsive C to the downside before then continuing to the upside. Of course, preferably price will first hit the 3A2 or higher to the other resistance areas we mentioned. If we zoom out, I keep repeating this one because it is also important also for the target areas of a wave Y towards the downside, right? So this is a volume profile taken of this range over here, and I extended the lines myself with some horizontal trend lines, and you can see we are backtesting the value area high. If this one gives up, the next target is going to be the point of control at 27.9k. And if we look at the support areas, well, around 27.9k, there is not too much support. It doesn't look too great as a support area, but below the red line, which is the point of control between 26.8 and 27.4k, we do have important support, and also even a little bit lower between 26.2k and 26.4k. If we then move towards the micro time frames, then this is the bullish scenario, which looks a little bit ridiculous actually, where this then has to be a finished structure to the upside in then either a multiple wave 1-2 scenario. That is actually not possible. I just came back from France, so I didn't update this. So this has to be a wave 1 diagonal, so it has to be basically wave 1 to the upside. So this then has to be a wave 1, and the reason, by the way, why I noticed this, if this is a 1-2 1-2 1-2, then the last potential wave 2 is not allowed to go below the last potential like wave 2 or origin of wave 1, and then potentially a continuation. So 1-2 1-2 1-2, you want to see a move to the upside where then these lows are not allowed to be taken, which happens. So therefore, it's invalidated. So this then has to be a wave 1 followed by a wave 2 ABC zigzag. That is most common for a wave 2, for then now a potential diagonal pattern towards the upside to begin a wave 3 to the upside. Now in this scenario, if this is a wave 1 to the upside, this is a wave 2, and this is a second wave 1, then because this second wave 1 is of a lower degree, and what I'm meaning here is that this move up is going to be the green count, and then inside the green wave 3, we then have another bullish structure towards the upside, which is then now in white. The white count is a lower degree count than green, because we are now counting over here only the beginning of a wave 3. So this by itself is then going to be a wave 1, because a diagonal to the upside is then a leading diagonal. So this will then be a wave 1, 2, and they expect 3, 4, and 5 to finish wave 3 in green, and they have 4 and 5 in green. Now therefore, because this wave 1 had, well, this amount of time, like this amount of time, we take a fib time from the beginning to the end of wave 1, and then we put it on the low of C. Preferably, this first wave to the upside over here is not going to take longer in time than this first structure. But you can clearly see if this 3-wave move to the upside is only the first structure of a bigger diagonal, this diagonal is going to be massive compared to this wave 1 over here, which is not what you want to see. So therefore, this scenario is incredibly unlikely. One could potentially think about this being maybe a zigzag, another zigzag, and then, I don't know, like a bigger diagonal, but that doesn't look nice as well. Basically saying that the very bullish scenarios where this low is not going to be taken are not looking too great at the moment. That's basically the summary. If we look at the more bearish scenario, we are looking at a corrective structure where this is the first move to the upside, followed then by potentially this WXY over here with a zigzag in W, 3-wave in a wave X, and now we're looking for another move towards the downside in a wave Y, where this is then the first structure to the downside. Then we have a 3-wave structure before then continuation for wave Y and a move towards the upside. And what is important is we do have a daily here at 29.2k, so that can give a little bit of support in case price would move towards the downside. Now what did happen, and which was very nice, is what happened over here with this wave X, because price hit the blue target area that we were looking for, because this was a scenario shared a couple of days ago in a video, right? Where we were looking for price to move to the upside, 29.5k area, right, for potentially a short position. Of course, no financial advice, but it was a high probable scenario over here, which was exactly this level over here. Very, very nice. Now, we might not see the continuation that we were looking for, but that's how we then, after potentially entering a short over here, that we just observe the waves, and based on the waves we can make new plans, right? But at the moment it does not look very impulsive towards the downside. It looks more like a corrective horizontal structure, and because this looks like a very horizontal sideways structure, eventually a new high can be expected, like basically taking this high over here, where then the first resistance area is going to be around 30k, because if this was a continuation to the downside, you preferably like to see impulsive structures to the downside, and this is clearly a 3-wave, and well, we got now a first structure of potentially another 3-wave to the downside, unless this becomes a diagonal, which then has to be something like this. But as it stands now, that's not yet what we're looking for, because price didn't take this low over here. If we look at these CVD divergences, then we do have over here bearish CVD divergences, lower high in price, higher high on the CVD, but this is a second CVD divergence because the first one was between this high and this lower high. So now this high has a second bearish CVD divergence, which usually has lower probabilities. The more CVD divergences you get with one particular low or high, the lower the probability become of this one particularly playing out. Now more locally, we have over here a bullish CVD divergence, higher low on price, lower low on the CVD, but this one has been countered by very low time frame bearish CVDs over here. So if I now zoom out, then first of all, you can see the bigger bearish one, lower high on price, higher high on the yellow line, bearish CVD divergence, but you can see here, lower high on price, higher high on yellow. That was the first one. This is the second one. So therefore, lower probabilities can still play out, but each high that's being made, creating bearish CVD divergences, is going to have lower probabilities if they play out. So this first one has already played out, and therefore the second one has lower probabilities than the first one. It's all a probabilities game. Now more locally, we then have over here higher low on price, lower low on the blue line, a bullish CVD divergence, and more locally, if we zoom in, you can see lower high on price, but a incredibly higher high on blue and on yellow as well. And if I quickly refresh the chart, then the candles are reset, and you can see the invalidation of this bearish CVD divergence is taking the high over here, and it played out if we take this low over here. Now we did also have some very 5-minute bullish CVD divergences, it seems, higher low on price, lower low on the CVD. So it's a bit of a mix of a lot of different things, not too clear on this time frame. So if we then zoom out on the medium time frame, we are looking for the bullish scenarios where we are still going to be looking for a continuation to the upside. Not necessarily saying that this is the scenario playing out, because honestly, the probabilities between this one or this one, well, I think currently the probabilities might be higher for another move towards the downside instead of a continuation to the upside. So it might be a little bit tricky. I wrote bullish here, but what I'm saying is we're going to go for new highs, preferably at the moment that's the highest probability, and not taking this low. While on the micro time frame, currently, based on what I explained with that bullish double leading diagonal scenario over here, that doesn't look really great. So at the moment, the more bearish scenario has a higher probability, where yes, we do expect a new high to be made, and then we observe if this is an impulse or a corrective structure, right? That's step number one. If it is an impulse, we might be looking for higher prices, but if not, then we could be looking for lower prices in this particular scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.